please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC Tv18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh, and in a minute I'm going to be joined by Surabhi Upadhyay as well. Well, the markets had a huge day yesterday. 100 on the Nifty, 400 on the Sensex, 500 on the Bank Nifty. But let's remember, even with that 100 points in the Nifty yesterday, Indian markets underperformed most of the Asian markets. Kospi, Nikkei, Hang Seng were all up over 1/4 to 1.4, 1.5%. Therefore, it was a strong global tailwind, and that tailwind has gone for a pause today. So we don't have big Wall Street cues. We don't have big Asian cues at this point in time. It was a quiet, as expected decision from the Fed. But perhaps what can ignite India or continue to keep India in favor is this big FII buying we saw. Remember, we have seen only FIIs selling for a goodish bit. And therefore, this, I think, about 500 crores in State Bank, about 600 crores in ICICI Bank, nearly 600 crores in Bharti. Okay, that was the only non-bank. Axis saw another 500, 600 crores. So this big bank favor that we saw on the part of FIIs might still give a follow-through. Of course, yesterday we had Bharti results and the SBI rate cut. We don't have that strong tailwinds today, Surabhi. We do have a decent cognizant guidance. We have good hero moto margins, but I don't know whether we had that much of a fire that we had yesterday.
Absolutely. Good morning, Lata. Yeah, not so much in terms of, major earnings and market driving sort of earnings today. And Cognizant numbers, I'm not sure, because we've already heard from all the major IT companies already. We've heard it from them, seen their body language. So maybe, yes, that slight upward revision that we got on the Cognizant guidance on the lower end, I don't know if that's going to be enough to move the needle on stocks. But as you're saying, I mean, a lot of it seems to be global in nature, a lot of global headlines and global events that are dominating at least mind space. Who the next Fed chair is going to be, whether it's going to be Jerome Powell, whether he'll continue to favor these gradual rate hikes as has been expected and anticipated. And I think yesterday, I mean, again, no fireworks from the Fed meeting. It was so staid. It was absolutely according to script. But BOE seems to be sort of in focus today as well. The question is whether they can raise rates with the pound falling or not. But then the economy, obviously, perhaps not weather that rate hike very well. So I suppose today doesn't seem to be a day which has very solid cues in terms of a clear, favorable directional call, either on the way up or on the way down.
No, except that the bulls are in very firm grip.
Oh, yes.
I mean, yesterday we closed at the highs.
Yes.
So to that extent, that means there's pent up buying energy even now in the Indian markets. That works definitely in favor of the bulls. I take your point. Global issues, I'm not very sure. For one thing, we just had Raghuram Rajan speaking to CNBC Asia. And the one strong point that he made, which everybody in the market will agree, no one person can change the Fed overnight on a dime. It's a big ship that, it's consensus that moves that big ship. So, the markets may speculate, and especially the media, about what Powell might mean and what happens if Yellen continues. But my own sense is, in this itself has not changed market mood. As we saw yesterday, it was flat. And two, we have been moving more on domestic steam.
On our own cues.
Yeah, so at the moment, I'm less worried about Powell or BOE, maybe results today, as well as, how much more steam the FII buying has. This buying of banks was a bit of an eye-opener.
Yeah, oh, absolutely. In fact, that's what we're going to focus on as well. Let's actually get you some calls that we've got this morning. Here's what the wise experts have to say as we get trade ready. Dhirendra Tiwari of Antiques says, on an aggregate level, second quarter FY18 earnings have been below expectations, with profit after tax growth at 7.4% year-on-year for their coverage universe and 4.2% year-on-year for the Nifty. The drag has been due to stock-specific factors and sector-specific trends do not point to any concern. Stocks with strong results so far have been Maruti, HUL, Z Entertainment, Ultratech and BHEL. Among the large caps, where there is likely to be a positive surprise and elevated year-on-year expectations will be met. These are Bharat Financial, Shree Cement, BPCL, HPCL, Cipla, Moil and NMDC.
Okay, so that's Antiques favorites. Let's get you some money market views. Mohan Shenoy of Kotak Mahindra Bank says, with buoyant equity markets, the rupee is expected to stay supported. The USD INR expected trading range for the day is 64.45 to 64.75. So basically, Mohan is referring to the fact that there was such a strong FII inflow yesterday. But today, with the dollar starting on a very strong note, it's almost 95.
Yeah. Well, that's the rupee call. Let's move to bonds as well. Mohan Shenoy says crude oil prices beyond $60 a barrel, uncertainty over terms of the recapitalization bonds, continuance of OMO and expectations of a steeper yield curve has made the sentiment in the GSEC market quite bearish. The 10-year benchmark is expected to trade in a range, he says today, of 6.88 to 6.91%.
Ooh. I don't know if it'll go beyond 6.9, but, my experience with vegetable prices have also been very negative.
Absolutely, I concur.
Tomatoes, too, have gone to 80 rupees. So, I mean, the point is these things have a way of working, and we will get the inflation number in, another 10 days. Yeah, it's 10 days away. But I don't think 6.91, I'm a little unsure. There was a lot of buying at 6.88, 6.89. So I don't know whether, but Mohan is a master of his game, and we should take that very seriously. If it goes to 6.91, negative Nifty bank. So we'll come to that in a bit. Let's go over to Mangalam for the world view.
Mixed-ish sort of cues coming in from across the world. If you take a look at the United States, Wall Street ended largely in the green, but remember, ahead of the Fed decision, all the three indices hit intraday record highs and then receded from there. Remember, yesterday the Fed left the door open for a December rate hike while doing nothing in the recent meeting. All eyes will be on the new Fed chair announcement. The ADP, private job sector report, that one indicated that the job addition was higher than the expectation of 200,000 job additions. In terms of individual stocks, we had Estee Lauder, the cosmetic maker. That one beat expectations, moved 9% higher, while Envision moved lower by 34% on the back of weak earnings. In terms of macro watch, post the Fed decision, we saw some strength come by in the dollar, as well as some strength come by in the US bond prices. Inversely, some weakening in the US yields. Across the Atlantic in the European markets, again, by and large, green cues, flattish for the FTSE, but the DAX, that one moved higher on account of good gains coming by from Volkswagen. The UK pound, that one strengthened ahead of the Bank of England meet, and that was primarily because there are expectations of a rate hike after almost a decade. In the periphery, the adventure index, Spanish index, underperformed its Greek as well as Italian counterparts. And in the emerging market space as well, we saw mixed cues come by from both the Russian as well as the Brazilian indices. Across Asia, there is a bit of a tinge of a red, barring the Nikkei, which is gaining on account of weak yen. The SGX Nifty indicates a mildly tepid start as far as our opening is concerned.
Okay, thanks a lot for that, Mangalam. Well, actually, we're going to get a very learned global view. We are cutting across to the Barclays Asia Forum, which is underway in Singapore. CNBC is the special media partner. That's El Arian in conversation with CNBC.
In the last few years. In the last few years, the best trade was to go long the market and buy every correction. And I think the market has been conditioned to continue with a very profitable trade. So you need a major shock or a major series of shock to change that conditioning.
Like what?
A major geopolitical shock, a major policy mistake, finding out that some segment of the market is well overexposed and you get an accident there. But it has to be something major. Small things will not derail this market.
Some investors we speak to are rather nervous that perhaps we could see a flare in tensions from North Korea, given that U.S. President Donald Trump is getting ready to come to the region. Do you think that's still a risk out there?
So I think it's one of the risks, and it's very hard for the markets to quantify that risk. Very, very hard. So the market tends to say, it's a risk, but I'm not going to price it in for now.
And so it seems to me that you think the good times are still here to stay, but we also had a conversation, you're saying in some ways the ECB has a lot more to do with markets in certain areas.
So I think there's a major disconnect between how comfortable the markets are and the reality on the ground. And I call it the difference between a journey and a destination. The markets right now are betting on the journey. They're saying, I know the destination is complicated. I know there are many uncertainties in the destination, but what matters to me right now is the journey. Right. So part of the complication in the destination is what happens when more than one systemically important central bank starts normalizing. And the ECB is starting slowly to normalize. The Bank of Japan will follow in a while. The People's Bank of China is probably going to follow in a while. So a major uncertainty is not whether the Fed can deliver a beautiful normalization, but can more than one central bank do so?
You just talked about the BOJ there. Interesting enough, Abe yesterday didn't officially say whether Kuroda would be staying in his position. Would that be a big shock to the markets?
I think so. I think the markets has priced in that Governor Kuroda will continue, has priced in that while the equity purchases may not be as pronounced, certainly the commitment to bond stability is still there. So anything that shocks that would be destabilized. But I don't think that's going to happen.
Whether it's the Bank of Japan or the Fed, there's still a lot of head scratching, if you will, about this inflation question or the lack thereof. How do you think it ultimately ends? Are we going to see an adjustment within the central banks when it comes to their insistence on the 2% target?
So first, it's one of three big uncertainties. It's not just inflation, it's wage determination, it's productivity. And these are three critical inputs into central banking. That explains why central banks are very cautious. That explains why they're data dependent, because they need more information. I don't think the central banks will abandon the 2% target. I think that they feel that if they did that, it would introduce too much fluidity. And there's a question mark. There are those who argue that maybe the target should be 3% or 4%. And there are those like me who says maybe structurally, whatever the right inflation rate was in the past is now lower because of the impact of technology and demographics.
And do you think that they are staying vigilant of the potential financial risks out there as well? Is that taking on more prominence in the decision-making process?
So I think, as Raghu Rajan said, they need to strike that balance. I think there's now greater concern, and you hear this from the president of the New York Fed, there's greater concern about the potential for financial instability down the road. You know, when Ben Bernanke embarked on QE2 not to normalize markets in August 2010, but to deliver economic outcomes, he said it's about benefits, costs, and risks. And one of the biggest risks, the unintended consequences, is financial instability. So that is something that I think central banks will pay a lot more attention to going forward.
A little bit of red on the SGX Nifty. It's time now to get you the CNBC TV18 top 10 list of the morning. And guess what? Earnings are really dominating that list once again today. Good morning, guys. Naveen, I'm going to start with you because the big one came out with the numbers after market hours. Hero Moto, how's the ride looking?
In line, Surbhi, revenues a tad below what the street was expecting, 7.5% versus an expectation of 12%. Why I'm saying tad bit is because if you adjust with the tax implications that were coming in that Haridwar plant, the company has come out that the revenue would have gone on a like-to-like basis at 11.5%. But the biggest highlight of the numbers was the margins. The margins came in at 17.5% versus an expectation of 16%. This despite that the gross margins had fallen from 33% to 31%. So where has the company done some bit of pruning? That is in the other expenses. So the other expenses as a comparison to sales has reduced from 11.5% to close to 9.5%. So that is a big positive. On the other hand, management commentary also has been fairly sanguine. They believe that the demand in the H2 second half of FY18 will be sustaining, but margin will be in some bit of pressure as the other expenses are expected to increase. On the back of this, brokerages haven't really changed their estimates as such, but they are more or less positive. So UBS has a buy on the stock with a target price of 4,650. Macquarie has an outperform with a target price of 4,400. CLSA maintains itself with a target price of 3,000 on the stock. Back to you.
Okay, that's a positive. Hero Moto, definitely one of the motors for the markets today. But so could be Tech Mahindra, you think, Anisha?
Well, not really, not as much, because the numbers came during market hours yesterday. We saw a bit of move on that one yesterday itself. Now, the key highlight of the number was that all numbers beat expectations by a good margin. But the key positive was the margin number, because the EBIT margin came at 11% versus an expected 10.5%. And that is what brokerages are rejoicing as well. But they do question whether the sustainability of this margin number is possible or not. Now, the management answered that question during the press conference. They sounded optimistic, and they said that there are many levers to pull the margin growth trajectory, so that should come as a positive. As far as the brokerages are concerned, most of them have raised their target price and estimates. The valuation and everything should come up for you on the screen, but it remains a neutral or a sell for most of the brokerages, because they're waiting for some more confidence to come for the revenue as well as the growth number. So let's see, the stock should open up mildly in the green, but not a big bang opening.
Okay, so waiting to see some sustainability of that performance. I guess that's the case with TechM. Naveen is back with us. Now, Naveen, these TVS numbers, just 3% growth in October. How should we interpret this?
So this is below what the street was expecting, Surabhi. See, we were expecting a growth of close to 9 to 10% on TVS numbers. The growth was expected to be around 3,38,000. But the biggest highlight of this is that the exports that have grown close to 29%. But the two-wheeler sales, that has been more or less flattish, almost 1% uptick. So TVS Motors won't be taken. We'll have to look at it from a perspective that it hasn't come what the street was expecting. But remember one thing, the stock has already fallen yesterday, down by what, 2.5%, in spite of the decent inline numbers that the company had posted. So I expect the stock to be in red, but we can see some bit of an uptick because of the numbers coming positive yesterday. Back to you.
Okay, yes, there is the positive of the results, but we are going to see perhaps more reaction to the October sales numbers today. Generally, it's not been a great October for auto stocks. But with that, to another set of numbers, Anisha, Hexaware.
Well, yes, it seems like good news for IT space today because Hexaware numbers were strong as well. The revenue growth came tad bit ahead of the expectation, but here also the margins really, surprised us on the upside. The margins improved to 17.4% versus our expectation of 16.3%, and this is despite the pressure that we had seen from wage hike and currency headwinds as well. Now, in terms of the segments that you talk about, healthcare has done well for the company because that grew over 7%. BFSI is the case with the rest of the IT pack that remains a bit sluggish. That just grew by 1%, but I think the street would take heart from a decent revenue growth and the margins expansion.
Okay, actually, while on the subject, Anisha, will they take heart from the slightly upped-up Cognizant guidance?
Well, yes, I think the street would like that as well because the numbers, as far as Q3 is concerned, they have met their guidance and the Q4 guidance is strong as well. As you mentioned, the guidance for entire CY17 has been raised just marginally. So essentially versus the 9 to 10% growth that they were expecting earlier, now they're expecting 9.5 to 10%. In terms of the verticals, what Kotak says is that the read-through for IT companies, for Indian companies basically is that FSI continues to remain sluggish. That is what we have seen for Cognizant numbers as well. But the other verticals are firing, and that is what the rest of the Indian IT companies are also betting on. So that comes as a positive. They also mentioned that Cognizant's investments in consulting, digital, etc. started to paying off. And that is the case with the Indian companies as well. So the overall read-through remains as it was earlier, but overall just slight bit of improvement coming as far as the other verticals is concerned.
Okay, all right. Thanks, Anisha. So that's a bunch of tech numbers we have to keep in mind. Now let's move on. JSW Energy came out with numbers during market hours, but the more interesting headline came in with the management interaction. The company's deal to acquire JSPL's Tanmar thermal plant in Chhattisgarh could get derailed, and that is the word coming in from JSW Energy's own MD, Prashant Jain. He said that JSPL's inability to secure necessary approvals could lead to the failure of this deal. So not so much problem maybe for energy. But what happens to JSPL? Let's ask Nigel. Nigel, how crucial was this sale for JSPL?
Well, it was pretty crucial, actually. I think we should have heard out the management, actually. So what JSW Energy's management says is that, in fact, that they're not very confident that the deal will go through. Just rewind to 2016. At that point of time, JSW Energy had agreed to buy a 1,000-megawatt power plant of JSPL. What was the deal valuations then? The enterprise value that was agreed to was around 4,000 crores. That could be upscaled to around 6,500 crores. And the deadline was June 2018. Now, if this deal doesn't go through, then in fact bankers will pressurize JSPL, and then things may not look too good because they were counting on at least 4,000 crores coming in the middle of 2018. So on the back of this denial coming in from JSW Energy, I think JSPL could be under some pressure.
Okay, that's not very good news. Let's listen to Prashant Jain on the matter.
The closing date for the transaction is June 2018, and both the companies are committed, but I am I don't think it will be going through because I am a bit skeptical because the necessary approvals have not been secured by JSPL so far.
Oh, the important point is JSPL was forced to be declared an NPA by the Reserve Bank for Axis, and my sense is other banks as well. But in Axis's case, because it was a divergence, it got announced. It has to be more than 15% of your current NPAs. My sense is that it is this kind of discomfort that forced the RBI, that the debt restructuring is not, as they see it, in place. So now it makes sense. Otherwise, there was a lot of angst on the part of bankers that RBI is actually doing an AQR and calling it, divergence. But my sense is the regulator knew something which banks were refusing to recognize.
Okay, so that's what we know. JSPL obviously in focus, and the color is red today. But a couple of other stocks on our radar as well. Varinder is here to round up the action. Varinder, you're watching out for the IDFC Twins?
Well, I'm watching out for various segments, and one of them, of course, is IDFC Twins. Yesterday, IDFC Bank was up nearly 10%. Look at the delivery. The delivery volume on NSE was nearly 1.6 crore shares, which is the highest since July 2017. Now, of course, a lot of talks in the market going on that there could be some changes at the top level. It could be announced next week. Let's see, what comes there from not. But I'll also watch for IDFC Bank, IDFC Limited, because again, talks that if the Shriram deal hasn't gone through, there could be reverse merger, which could happen. If the reverse merger happens, IDFC Limited is trading at almost 50% discount to IDFC Bank. So if that reverse merger happens, you will see the discount narrowing or even vanishing away. So these two stocks could be important because they have seen huge open interest build up and of course delivery volume as well. The second set of stocks I'll be watching is the real estate stocks. DLF saw delivery of 83.5 lakh shares yesterday compared to 10-day average of 21 lakhs, 4 times 10-day average. HDL, which has come back in the ban, has seen average yesterday delivery was nearly 3 times 10-day average. So there is something happening in some of these real estate stocks. India Bulls real estate was up 6-7% yesterday as well. Keep an eye on these stocks. And the last one, of course, all these PSU stocks. Dredging, the stock was logged at 20% upper circuit yesterday with pending buy orders. We'll keep an eye on Dredging Corporation, STC, MMTC, and of course some of the fertilizer stocks which are moving up yesterday. There was some delivery-based buying happening in most of the stocks.
Okay. Well, point taken. Thank you very much for putting all that on the table, Varinder. But we still have some more stocks to look at, and numbers in particular. Mangalam Jyoti Labs.
Well, Lada, I'm watching out for Jyoti Labs primarily because it's November, and why that is important because Henkel, the company which had an option to buy 26% stake in Jyoti Labs, that deadline was extended from March 31st to October 31st. Now we're in November. The company has time and again told us that they will give us a clear picture of what is going to happen with that deal. So we'll keep an eye out on that. Most likely, the company is likely to clarify on November 7th, where they meet for the second quarter results. So we'll keep an eye out on Jyoti Labs until then.
Okay, all right, Mangalam, thanks for that. Naveen is back. He's got his eye on Apollo Tyres. How are the numbers, Naveen?
No good news for Apollo Tyres. This is actually the first company in the tyre space which is reporting its Q2 numbers. Revenue up by 11.5%. Remember, we were estimating a growth of close to 13%. So that is not in line. The other one being margins. Margins way below what we were expecting. 10.5% is what the margins have come at. 11.5% is what the street was expecting. This is majorly led by the gross margins that have come in at 42% versus 46%. Remember, the margin problem has been going on with Apollo Tyres because the utilization at their Hungarian plant, that hasn't been ramping up, and that is one key reason why we are seeing a negative operational leverage on Apollo Tyres. If you see the trend also, this is the second lowest margin for the company in multiple quarters. So looking at how Apollo Tyres has fared, it will be interesting to see how the other tyre companies post their Q2 numbers. Back to you.
Okay, now that's important. So, what we're getting is autos and now tyres are both indicating that things are not as gung-ho as the September auto sales numbers made it out to be.
I think the pre-festive season, I guess, buying or the wholesaler stocking up happened then, and therefore October is turning out to be a little bit of a
and in
lackluster month.
Apollo's case, even the September numbers are not all that good. But yes, with more numbers, Ronit, you're giving us a wrap of all the other results?
Yeah, so there's only one good result yesterday. That's TCI Express. Revenues were up 10%, as well as the EBITDA was up 14% and the PAT up 36%. I expect that stock to be in the green. Moving on to the weak set of numbers, Camlin Fine, another disappointing set coming in for the company. Revenues were up 26%, but the EBITDA was down 26%, as well as the margins came in at 3.1%. Moving on to eClerx, the mid-cap IT company. Revenue slight downtick, but EBITDA again down 25%, largely because of a rise in their other expenses. And this led to their PAT also down 9%. Moving on to Mahindra Holidays, slight disappointment. Their revenues down 6%, EBITDA was down 12%, as well as a slight contraction in the margin of around 150 basis points. Finally, moving on to music broadcast, post-IPO blues there. Revenues were up 10%, but the EBITDA was down 16%, largely due to a rise in the other expenses up 46%, as well as their margins were down 980 bps. Finally, APAR Industries, again weak, revenue down 3%, EBITDA again down 12%, as well as the margins 70 bps contraction. So you can expect all these stocks to be in the red today.
I think, Ronit, APAR Industries. Okay, fine. All right. APAR is usually the name that I go by, but all right, you take your pick. Quick recap of our top 10 list then for this morning. Stocks expected to gain are Hero Moto, Infosys, TCS, Tech Mahindra, Hexaware, as well as TCI Express. Stocks that could be under some pressure include JSPL, TVS Motors, Apollo Tyres, Camlin Fine, E-Clerks, Mahindra Holidays, Music Broadcast, and APAR Industries.
All right. Well, Tech Mahindra is the one that stands out, and today could be a tech day given Cognizant as well. So let's give you more about Tech Mahindra. As we said, reported a good set of numbers for the second quarter. Dollar revenue beat street estimates with a 3.5% jump. The rupee revenue at 7,606 crore was again ahead of street expectations. As well, we have CNBC Tv18's Kritika Saxena, who spoke with the management, and here's what they had to say.
It depends on how you define communication. If you're talking of telecom per se, yes, we do expect there will be a marginal increase as we go forward.
In the next 2 quarters.
Yeah, but insofar as communication on a broader term, I think the growth will be much faster because there is no vector of the economy which can do without communication.
Okay, fair enough. What about North America, Vineet? North America headwinds have been clear in the last couple of quarters. By when do we expect stability in terms of discretionary spending from North America, from US?
Well, the North American economy is doing well. I think you will see its impacts in time which comes. But by and large, I think we are quite happy with what's happening in North America, and our growth there has been pretty decent.
So by when do you expect that to translate into a spending uptick for IT companies, for Tech Mahindra? Is Q4
No, look, we are pretty positive going forward this year, despite all the political uncertainties, whether it's Brexit in here or what is happening in the US and elsewhere. But politics is separating from business. It would seem.
Yeah, that's true.
And IT, especially the changes which are coming about, I do suspect will continue to make this sector.
And now it's time to put all that we had in terms of micro and macro trends into the charts and check out with our chartists how things might pan out. That's SGX Nifty starting a little bit on the back foot. And as we've been saying yesterday, we were beneficiaries of the global tailwind as well. Most of the Asian indices ended higher than where Nifty ended. With that preface, Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar, good morning to all three of you. Ashwini, how do the things look? It does look like a firm bull grip. We ended at the highest point of the day. So is there more follow through, or will the global headwinds put an obstruction?
Well, good morning. Early morning, I think you will get a bit of a 20-30 point dip, and that should be used to reassume long positions. Overall, the market seems to be in some sort of expansion. But it must be remembered that this expansion is coming after 600-700 points of rally. So there aren't great amounts of short positions. So this always needs to be remembered, that the market does not have pressure of shorts to push it higher. But overall, I think higher level should be here. 10,500, 600 thereabouts is a fairly decent target. So Nifty futures a buy with a stop of 10,420 and look for targets of 10,540. The more interesting chart is the Bank Nifty, where a longer consolidation is breaking out. For many months it was very subdued. So that's where greater optimism is there. So that is a buy with a stop of 25,300. Look for targets of 25,800. Again, 50-70 point dip will allow you to get in.
Wow, okay. So Ashwini is willing to go long on the Nifty and the Bank Nifty if the morning dip comes in. So Darshan, good morning. How are you approaching things today?
He's long anyways.
Good morning. Well, we have been long for many days, and sometimes we just get lucky, and that's good. And today is a day to take profits. You know, swing traders must also exit. Now, we've had a very big, large range day yesterday. We were opening at the lows. That was a large gap up. That gap up was sustained, went up during the day. So a very large range from day before yesterday's close has developed. That range is something we take advantage of, and we lift our, close our long positions in the Nifty bank, take profits. Markets will consolidate again, hopefully. They will provide us with new re-entry opportunities. So this is not a change of trend. It's a matter of tactics. I don't think there is a trade on from me on the long side. It's almost certainly going to go into a consolidation. That large, stupendous rally cannot continue. Yesterday was probably a sign. The Bank Nifty, as Ashwini said, is just coming out of a 4-month consolidation. A far more interesting chart comes in the Bank Nifty. But I think there also we will get other opportunities to re-enter, and we'll wait for them.
Fair enough. Okay, Mitesh, good morning to you again. How would you trade Nifty Bank?
Good morning, Lata. We've been advocating the Bank Nifty trade since yesterday morning when the breakout about 25,150 happened. I think we'll continue with that. The Nifty, the Bank Nifty will obviously contribute to the upside in the Nifty, and I think that would see the Nifty head towards 10,500. But if you look at the risk-reward equation, the overall strength of short-term indicators, I think clearly Bank Nifty is the preferred chart. It's met the first target of 25,500 yesterday, but I think 25,850, 900 or thereabouts, even 26,000, I think is the next logical target over there.
Okay, so let's start getting some stock ideas as well. Ashwini, I'm seeing your list. Do run us through it. Also, I don't find too many banks, individual bank stocks on it.
Well, banks was yesterday's story. See, today is going to be a little sideways and choppy, and you have to look for specific themes. I think this divestment theme, which started yesterday, may not be ending anytime soon. And now, people will start guessing about other stocks. So that's one of the ideas. I think telecom picked up, but only Bharti went up substantially. Idea did not. I think Idea could do that. And MOIL is something which is in a fairly strong uptrend. So that should also continue. So specific levels, Idea is a buy with a stop of 96, target of 108. MOIL is a buy with a stop of 258, target of 273. Torrent Power is a buy with a stop of 278, target of 293. MMTC is a buy with a stop of 68, target of 76. And Hindustan Copper is a buy with a stop of 73, target of 85.
Okay, Ashwini, so that's an all-long strategy. But Sudarshan, today you have 2 sells.
Yeah, yes, that's right. The markets could pause, and that's a question mark, but they could pause. And the two selling opportunities are both in NBFCs. Capital First, where a large rally found resistance yesterday, and the stock is in any case in a lower low framework. So the rally was simply a relief rally, and that fizzled out. That's a short sell, and it's on the verge of breaking down to a large bearish pattern. And the second is LIC Housing, where even the rally was missing. So 2 short sells in NBFCs, and that sector generally I think is ripe for a much bigger decline. The 3 buys are easy. Balkrishna Industries, an outperforming stock, now on the verge of making lifetime new highs. It's easy to buy that. Hindalco in a consolidation, could break out on the upside, hasn't done that, but could, and we are buying in anticipation. And Ultratech Cement, where a big rally led to a 4-day consolidation, and that consolidation should end up resuming that up move. But generally be a little careful today.
Okay, fair point. 2 NBFCs on Sudarshan's sell list. Mitesh, let's come to you. What are you working with? Top trades today?
Yeah, so a bit biased towards metal stocks and a few more buy calls. Muthoot Finance is the first one. It's broken out nice from a contracting setup. So buy with a stop at 500, look for a 535 kind of target. V-Guard, and the stock was clearly buzzing yesterday. Fresh highs, good price and volume action. That's a buy with a stop at 218. I would look for targets of 250 here. And amongst metal stocks, Hindustan Zinc is now showing continuation signals of the up move. So fresh buy with a stop at 318. Look for a 338 kind of a stop of a target. I have one sell call that's in Pidilite, which is broken below the key support zone of 775, 780. So sell this, keep a stop at 787, look for declines to about 744 levels, 744 targets. And finally, Hindustan Copper, I think Ashwini also covered the stock. Good breakout there. That's a buy with a stop at 70 for targets of 88.
Okay. Gentlemen, please stay on. We, of course, have lots more questions for you. But yesterday, in an otherwise downbeat October auto sales trend, We saw Escorts absolutely coming in with a standout performance, well above estimates actually. And we have with us Bharat Madan, the CFO of Escorts, joining us on the phone line. Mr. Madan, good morning. Well, first up, the October sales numbers. I mean, they were much better than, of course, Mahindra's sales itself, which contracted. But more than that, you know, there was a strong base as well. So if you can give us a feel of how demand is.
I think the demand this time has been there very good on the rural side, and we have seen the retail also actually going up in the line with what our wholesale numbers have been in the last 2 months of the season of September and October. And I think we expect, we are also expecting there will be some correction in this quarter. So obviously the festive season got preponed to Q2 this time and got divided between 2 quarters. So there may be some pressure on the industry numbers in Q3, but I think we expect this quarter should continue to do well.
What is the consolidated first half performance and in terms of growth for industry and for you? And what is your best estimate of, best guess of the second half?
The industry grew by roughly 21% in the first half, and our growth was about 17-18%. So, but if you look at cumulative till October, we are marginally better than the industry. So, it's more or less in line with the industry. So, we expect, I think H2 will probably show slightly slower growth because we expect Q3 will be slightly lower than the other division of the festival season. But Q4 probably can again see comeback of the demand, which can again be in between 15 to 18% growth in Q4. So overall for full year, we still maintain our guidance of 13-14% growth for the industry.
20%?
13-14%.
Okay.
Okay. So, sir, just to clarify on that point, since you're expecting slightly softer trends in the third quarter, on a monthly basis, what's the run rate that we should expect? Is it going to be 10,000 plus, or maybe the monthly numbers, the run rate dips below 10,000?
I think if you look at the number what we have done so far, I think we expect on a full year basis with 13-14% sort of growth, we should be clocking an average of 6,000 numbers a month. So about 72,000 tractors units, I think, compared to about 62 odd which we did last year. So 10,000 numbers more than last year.
Okay, now let me come to your results. Good revenue growth. How much of it was volume? How much of it was higher prices?
It was essentially volume-led. So you could see 30% growth happened actually on the volume front on tractors as well as on the construction side. But yeah, there was a correction a bit off because of GST, because this time the tractors have been subjected to 12% GST rate. And earlier, prior to GST, they were exempted from excise, and there were only 5% is actually VAT rate which was applicable. So 7% dip in tractor sale has come because of that. So that's why the realization value will show a little bit lower. So on the revenue side, the growth has come in value terms only 23% because of that. And we also took one-time hit of about 26 odd crores on the top line because of the compensation which we had to pay to the channel partners.
Okay.
So these two reasons are there.
Okay, so just give us a moment when that's important news that's flashing for Divi's. FDA to lift an import alert for Vizag Unit 2. We'll just sort of drill down into what that exactly could mean if it's an entire, clearing up of that unit. But Mr. Madan, a word on margins, because we've seen a very handsome expansion this time around in the second quarter. EBITDA is also higher by 100%. What drove this, and are these margin levels sustainable?
And the key reason obviously was the operating leverage which we enjoyed was the high volume season this time. So obviously if the volumes continue to be in this range, then definitely the margins will be there. But otherwise also on a full year basis, we have been giving guidance of improvement in the margin across all 3 division sectors which we were operating in. And we'll definitely see 1.5-2% improvement in the margin over last year on a full year basis also.
Okay, we'll leave it at that, Mr. Madan. Thank you very much for joining us on your numbers. That's a positive performance coming in from Escorts, especially margins, and of course the October sales. But this is a big lift for Divi's Labs as a stock and as a company. The US FDA to lift the import alert for the Vizag unit. And this is definitely, it has closed out the warning letter that was issued to the company. I would assume something that the market saw coming, but still very big.
If I recall correctly, and we'll just get Ekta in, what the company was doing so far was that there were a couple of products that were exempt. It could only ship out those exempt products from this unit, which is why sales were fairly sluggish anyway, even for the second quarter. But Ekta is here. Ekta, what does this mean for Divi's?
Well, actually, this is a big positive which is coming for Divi's Labs, but remember that it was expected. They came out with their numbers yesterday in the press release as well as in the notes to accounts. They had said very specifically that the 5 observations which had led to the import alert in November and December of 2016 had been closed and completed, and hence it was logical that the import alert, according to everybody, would have been lifted. So remember that the 6640 import alert is basically the one which is the most important, which exempts, which basically doesn't allow Divi's Labs to supply its products to the United States. So now this has been lifted. It's very important that it's been lifted, but we just need more clarity in terms of what happens with the new 6 observations which they had received in the latest inspection. But going by the fact, Lata, that the import alert has been lifted of the 5 previous observations, these 6 observations shouldn't be that serious, and that business should go back to normal for Divi's Labs. In fact, this should be very important in, from a larger perspective, that a company has managed to lift an import alert in less than a year for its operations, and that too should probably stand in favor for Divi's Labs today.
Okay, well, thank you very much, Ekta. Just stay on. We're getting the sales numbers for Bajaj Auto as well, and I thought I saw a 4% rise. If that's the case, then it looks a little more subdued than perhaps the street was expecting. But anyway, sticking with Divi's itself, is there therefore any earnings upgrade that you would expect?
You know, Lata, with 6640, which is basically the import alert after it took place, the thing is that there was a lot of products which were already exempted. Around 5% of their sales were only impacted. But yes, I do expect maybe some amount of an earnings revision to come through, because now that 5 to 10% also won't be impacted, plus production will be much faster, because earlier they had to scrutinize each kind of product line which was going out because it was exempted products, but now business goes back to normal for them, and hence maybe their sales potential will be reached previously, maybe back to around Q2 FY17 levels. That was pre the import alert which had taken place in Q3 of FY17, as well as the inspection which had taken place. So it is definitely important news for them, and kudos for Divi's Labs to have successfully managed to lift an import alert so quickly by the US FDA.
Okay. Well, thank you very much, Ekta. We'll keep coming back to you as you drill down into numbers after your conversation with analysts. But my sense is this will also be a bit of a breather for the pharma industry. I mean, if one company can break free from US FDA admonitions so quickly, rectify them, then that will rub off positively, I would assume, on the sector as well to some extent. And once again, let me come back to the Bajaj Auto numbers. They're almost in line with expectations. I mean, Naveen's now poll had thrown up an expectation of 8%. What they have done is 7.8. I mean, I think they're squabbling about 2,000 units.
Almost there. I was also looking at the export numbers. So the export growth this time around is around 15%. And remember, in September, exports reviving was also a big story for Bajaj Auto. There was a 17% export growth then. Now it's about 15%. So not bad. I guess the foreign markets continue to hold up fairly okay as well.
My own sense is that, just diverting into a macro theme, the Indian growth story is going to be kickstarted by export growth. I mean, the domestic impulses are still a little weak because of beleaguered balance sheets. So, I mean, there's no capex-related kickoff that we can expect domestically. But I think exports is going to be that one wild card which can take us places. And Bajaj indicated that in September. The October numbers are also indicating that. And incidentally, even Escorts did reasonably well on the exports front.
On exports.
So that's two good news, I think, for the markets. Divi's itself, and not bad numbers even as far as Bajaj is concerned. Okay, but I believe we have Amey Chalke joining us from HDFC Securities on Divi's. Amey, good morning. How big is this Divi's US FDA import alert getting lifted?
So this is really big news for the Divi's, because this will lead to around 15-20% kind of EPS upgrade, and also it will lead to a significant multiple re-rating in the stock. Basically, it used to trade at 20-22 types of P multiple before the import alert. So it will again go back to that kind of level.
So it's 20. You're expecting valuation to go up. I mean, multiples to go up, as well as an EPS upgrade of about 15%, right?
Yeah. At least 15%. Yeah.
So, Amey, in terms of the revenue impact, I believe Divi's was shipping out only products which were part of that exempt list. So, how much were they managing to do? And now, I mean, by when do you expect full-blown revenues to come back from this unit?
So there would be a three-way. There would be a positive impact. First is obviously the 5% sales which was hampered because of non-exempted product. It will resume because of the lifting of this import alert. Second thing, the new product approvals will come and plant can start producing new products from this facility, which will drive the growth going ahead. And third thing which will happen is the supply constraints which were there because of the stringent because of the lifting of this import alert. Second thing, the new product approvals will come and plant can start producing new products from this facility, which will drive the growth going ahead. And third thing which will happen is the supply constraints which were there because of the stringent protocol they have to follow to supply this product to the US market. That was taking down their pace of supply to the US market, which was hampering their overall growth as well. So these three factors will drive their top-line growth going ahead, basically.
Okay. Amey, do you think this will have a slightly positive rub-off on drug stocks generally? I mean, if one of them can negotiate US FDA rules so well and so quickly, will the pharma sector see some bit of relief?
I think they should. There should be some rub-off in other stocks as well. But eventually, it will boil down to each and every stock, right? So they also have to clear their own facilities. Otherwise, stock will not run up.
What's your current target, Amey? And how much of a price target upside do you think this event could lead to?
So after the recent run-up, we have made it neutral because there was not risk. It was not risky or favorable in case there was delay in the import alert lifting. So now we have to improve our target by 15-20%, EPS earnings by 50-20%, and there would be a upgrade of multiple also. So that will lead to more than 1100 target price.
Okay. All right. Thanks a lot for that. Amey, we also have Surjit Pal of Prabhudas Lilladher joining us. Surajit, what does the Divi's news mean to you in terms of an EPS or a multiple upgrade?
See, the news is more of a sentimental value rather than the actual things or numbers. I think what Divi's also guided on initially is that their top line is only 5% impacted because majority of the key products are actually allowed to supply. So they're on the exemption list. So incremental value-wise, I think very, very limited for this positive news in terms of numbers. Second thing is that in medium to long term, I think this could be positive because a lot of guys might have been filing ANDA on the back of DMF on those plants, so that will be positive. But on the other hand, you should also consider two things. One thing is that most of the plants are mostly highly utilized. So that means their new unit, which is still quite a far away, is not going to boost their top line. So whatever the expansion size they have done, that will be coming over a period of time. Okay. So I think top line wise or number wise, there is not much benefit out of this.
So get that, as you're also saying, it's only 5% immediate revenue that comes back because the plant can function as a whole. What about price targets? How much more would you give the stock now, given this?
I think maximum from here, another 100 rupees you can add to that. But you should also consider when you are talking about earnings, because U.S. market in last 1 or 2 years, they are seeing erosion of 10 to 12% or 15% sometimes. So if their clients are facing the erosion, they will also pass it on to their API suppliers. Okay. So that is also another thing, because we have seen it recently in Jubilant Life.
Fair point. All right, Surajit, leave it at that. Thank you very much for joining us. In any case, rupees is a 10% upgrade in terms of the price.
So lots of stock-specific news coming in. Divi's is a stock in focus, as would be, of course, Bajaj Auto. We've just got those numbers for the month of October. Let's now welcome in Sanjeev Bhasin of IIFL. He's with us this morning. Sanjeev, good talking to you. Starting up with auto, you know, TVS Motors, we saw those sales numbers, October just 3%. Now Bajaj has done better, about 7% growth. What next for these two-wheeler stocks specifically?
Yeah, good morning. So I think, you know, auto sales have been fairly tepid given that they've come from a strong base, and I think last year's catch-on effect will play out. Also, we had some of the disruption because of GST. But Bajaj Auto wins hands down. You know, it's been one of the best proxy two-wheelers all the way from 2700. And now, you know, the export market is where further momentum can be seen for them. So I think Bajaj Auto is definitely capitulating, and we actually had a contrarian buy on Bajaj Auto and a sell on Eicher, given that their new product launch, which is a total competitor to Royal Enfield, would slowly start to gain traction. So for us, on any decline, Bajaj Auto would be an outperformer. TVS, I think it would be flat. The stock is priced in most of the good news. Maybe this quarter could be a hiatus, but we'll have to watch for you know, the next month numbers onwards. Even this month, I think they've had tepid sales on the volume front.
And of course, the big boy who announced numbers yesterday, Hero Moto, does anything in the margins make you want to buy that stock?
So Lata, 50 basis point margin may not be enough to instigate further buying. I think autos as a whole have lost their best charm, you know, and they may be plateauing. It is other sectors which are actually outperforming. And at 10,400, you don't want to be brave. So if you own Hero Motocorp in your portfolio, so be it. But to further chase momentum would be difficult given the valuations. I think the competition is biting, but it continues to be the largest player in the two-wheeler. So we have a preference for Bajaj Auto over Hero Moto at the moment.
Okay, you're speaking about sectors that are on the uptick. So let me come to the PSU banks. I was just looking at one of those numbers that intrigued me. I mean, more in terms of the difference in valuation. Syndicate Bank's bad loans is about 9%. Vijaya Bank, if I remember right, is about 6.5% or thereabouts. Both of them are still trading at half-time book. Axis has almost the same amount of bad loans if you count the stress. If you count the stress, actually Axis stands at about 11%. That's going at over 2 times. Should this narrow?
Correct. That's a $1 million question, Lata. But I think for once, if you are not bullish on PSU banks, then you know you'll have to rework your maths, because this type of capital infusion, growth, and provisioning, I've never seen it, and it's the first time. And it tells you that, you know, this whole embroglio of bad loans, that is definitely going to end somewhere. I think a lot of, you know, asset management, asset restructuring, and asset liability mismatch is going to be there in the next 6 months, where lenders will have to definitely see that asset stripping is there and cash has to be bought back on books. So I'm relatively positive, and like you said, you know, the valuation comfort gives you enough of being bullish or even at a 10,400. As far as Axis Bank goes, it's purely news-driven and the infusion of capital, which again, for the PSUs, it will only be the government of India. So I think, like you said, it's a no-brainer. You have to watch out what you want. As a disclosure, we have 4 topics: State Bank and Bank of Baroda on the asset side, and PNB and Can Bank because of reduced cost of lending. I think it could work wonders for both the banks.
Oh. Wow. Okay. A related question from the financial space. Sanjeev, what have you made of the NBFC report card so far? And specific stocks, anywhere where you were convinced blowout numbers, you retain a buy, or maybe want to buy, initiate a fresh long. On the contrary, where growth has not lived up to high valuations and expectations, so therefore you would advise an exit.
Well, we've had a slightly cautious view on most of the NBFC stroke housing finance companies. We thought valuations were fully stretched, and now it's evident that they are not being able to show further traction. Case to point, Bajaj Finance, the poster boy of this industry, but asset provisioning and numbers were slightly misplaced, and we think road forward they have indicated for the next few quarters that would be an overhead. Now coming to a contrarian play, at 595 yesterday we put out a buy on LIC Housing. I think worst of the net interest margin accretion or contraction may have played out. The brand is very, very strong, and we think in the next few quarters, given the competition, it could start concentrating on volume and regain its mojo. So for us, LIC Housing is an accumulate at these levels. We think you could get a 15% upside in the next 6 months.
Okay. Time permitting, we'll continue this conversation, Sanjeev, on NBFCs, especially if there is going to be renewed competition from the state banks of the world, considering that yesterday State Bank took a giant deposit rate cut, 25 basis. We'll take a break. We are coming back with the pre-opening rates.